Hi there, business owner, and welcome to the 3Bs podcast, the place where we go beyond the numbers and dive into strategies to help you build a better business one step at a time. I'm your host, Stephanie, a multi-award-winning entrepreneur with over a decade of experience in the bookkeeping and accountancy world. If you're a business owner looking to streamline, grow, and get back the time that you deserve, you're in the right place. We're tackling real-world problems, answering tough questions, and digging deep into business-building secrets in just 15 minutes each week. So are you ready to build a better business with confidence and clarity? Then let's go.
Hello and welcome back to another episode of the 3Bs podcast, your go-to place for 15 minutes of CPD certified motivation, inspiration, or education each week. If you're new here, hi, I'm Stephanie Marshall, CEO and founder of multi-award winning bookkeeping and accountancy practice ABCS UK. I'm also a podcast host, business development nerd. The specs are on, that can only mean it's budget time. And I'm here to give you in just 15 minutes all of the information you need to know as a business owner as the Autumn Budget 2025 was announced today by Rachel Reeves. By the time you see this, you'll have slept on it at least, and the headlines will be all over the news. I know it's confusing. I know it's hard to understand. So let's whiz through it as quickly as humanly possible, because actually this was a very highly anticipated budget. Many people were worried about it, myself included. And the whispers that we've been hearing around the House of Commons and Lords and the industry since July, a lot of them actually didn't come to fruition. Rachel Reeves delivered her autumn budget on the 26th of November 2025 and spoke for around 75 minutes, an hour and a quarter, and was stopped 7 times in that time by the Speaker of the House. What often happens at these budgets and statements is the MPs that are in the room either highly agree or highly disagree with the changes that have been announced, the policies and procedures and plans that are being announced in the budget, and can get quite rowdy. So what often happens is the Speaker of the House, or Deputy Speaker of the House in this case, has to tell everyone to be quiet, has to stop, and then restart it again. Normally there's a couple of times. This time was 7. So hopefully that gives you an idea of how passionate the MPs in the room were with the announcements that were being made. The biggest faux pas I think I've seen in budget history happened about 45 minutes before Rachel Reeves was due to stand up in the House of Commons and deliver her autumn budget speech. Now, for some reason, and it's under investigation, the OBR, so the Office for Budget Responsibility, published their paper with all the changes in about 45 minutes before she was due to stand up. And not only that, it took about 30 minutes for them to take the report down. The BBC had announced a lot of the major changes before she'd even stood up. And the national minimum wage rates that come into force from April 2026 were actually announced the night before the budget by the BBC too. So someone somewhere is probably about to get a very big disciplinary, because there's been a couple of really big faux pas, and it just feels like, personally in my opinion, the political landscape right now is a bit of a farce. And as business owners and as humans, we don't have as much trust in them as we probably should, seeing as they are representing us in Parliament. Politics aside, let's go through some of the key changes that are going to affect you as a business owner in this budget. The Labour Party's manifesto is that they will not increase the rate of income tax, national insurance, or VAT during their time in power. Now, although they have kept that, they've been quite sneaky with what they've done, so they've frozen the thresholds. What that means is, for personal tax purposes, £12,570 is your personal allowance. However, the national minimum wage has increased, so more people will go over that threshold and therefore have to start paying income tax. And for business owners, having employees is a much higher cost from April 2026 because of this increase yet again. So although the thresholds are frozen and the rates haven't been increased, we all end up actually paying a little bit more tax. So the budget, I'm going to start with the biggest headline, is that it's a tax-raising budget, full stop. Regardless of the fact that the Labour Party's manifesto is that they will not increase the rates of income tax, VAT or national insurance, they have frozen the thresholds, which that means every other type of income that matters to business owners like you and I is going to be taxed more heavily going forward. It is the biggest tax-raising budget in over a decade, and I think all these little changes are going to add up to big differences for business owners. Dividend tax is a big one for directors. If you're a director of a limited company and you take a dividend, over the last few years, they've been reducing the dividend allowance and it's now £500. Now, Rachel Reeves has announced from April 2026, the tax on dividends over that allowance is going up. So the basic rate is going up from 8.75% to 10.75%. The higher rate is going up from 33.75% to 35.75%. And the additional rate is going to stay at 39.35%. This matters because most small business owners don't take big salaries. They take the standard 12,570, personal allowance, and they make the rest up through dividends. So for directors taking, for example, £40,000 of dividends in a year, that's now a bigger chunk lost to tax for exactly the same income. And don't forget, if you are a director of a limited company, you will get taxed personally on your dividends, and your company will also be charged corporation tax for those dividends. Now, the classic tax-efficient director pay strategy that we all know and love, that 12,570 in dividends, is still sometimes the most tax-efficient way, and that's when you need a bookkeeper or an accountant like us at ABCS UK to go through the strategy on how best to extract those funds and that income from your company into your pocket. Another increase of 2% is savings and property income tax rises from April 2027. Now, this one was surprising to me, but as I said, April 2027, so it's not something that's going to affect us in the next tax year. It's going to be the one after that, but it's something to be aware of when you're planning for the future. If you are a landlord, you're probably going to get brought into making tax digital from April 2026 or April 2027 anyway. So just remember that actually the tax you're going to pay on that income is also probably going to cost you more to be a landlord. And if you have a good savings pot outside of ISAs from 27-28, that is going to be taxed at 2% more too, as well as that property income. So again, get very clever. So with dividends in 2026, savings and property in 2027, those 2% increases don't sound a lot, but add them all together and that's quite a lot of money. And that is where bookies and accountants like us, you need in your corner to help you extract the most cash and be the most tax efficient you can for your income. If you don't have a bookkeeper or an accountant and you just want to go for what the changes mean for you, you can book a free discovery call with me at ABCS UK. We can get together 15 minutes, talk about your unique circumstances and see the best plan going forward. You may benefit from monthly recurring support or just need a one-to-one or a power hour just to get things out on an ad hoc basis or a quarterly basis. This is where the discovery calls really help because they give you an idea of where you are, what help you and support you need, and what help and support you can always plan to grow to needing in the future. The income tax thresholds have been frozen until at least 2030. Now, what that means is, although the thresholds are not going up, you're not going to be taxed another percentage or two like it was rumoured, but more people, because the minimum wage is increasing, more people will now have to start paying tax that haven't paid tax before. And those people that are on the cusp of basic rate and additional rate or higher rate of that 40% are more likely to tip over. An estimated 920,000 people will now start paying 40% tax on that amount over that 37,500 threshold, plus your 12,570. This is what confuses so many people, is when I say you're moving into a higher rate tax band, it's not your entire income that counts, it's only a small portion of that. So if you earn your 12,570, that's completely tax-free. Then the next 37.5 is at 20%. And then anything over and above that gets put into the higher rate threshold. So if you earn £50,000 and £1 would be taxed at that higher rate. Your 37,500 will be taxed at 20%, and then your 12,570 will be tax-free. Again, speak to someone, get on a discovery call. If you're employed and just want to know what that means for you as a person, then you can also book a discovery call with us and we can go through the unique circumstances and explain to you what that's going to look like. Because a lot of business owners are employees too, and they have side hustles, and I know they watch or listen to this podcast. And the biggest thing that I think will affect business owners is that salary sacrifice hit from 29. Chancellor Rachel Reeves announced that those who are using a salary sacrifice pension scheme to submit their pension contributions will become subject to both employer and employee national insurance. That was one of the big tax planning tools that accountants like me use to help you be more efficient with the income that you are earning and generating in your business. Employers will pay more, employees will pay more, directors using salary sacrifice will pay more. It's not the end of the world, but again, it's even more important than ever to have somebody that knows this information, that can look at the numbers in your world, in your unique circumstances, and help you plan for the future to be as most tax efficient as possible. Because it's not till April 29, it's not an urgent thing, and I'll definitely cover it more in a future episode. Maybe we'll get the guys from Penfold on here to explain what that means for you and your business owner, or you as an individual director contributing to a pension scheme via salary sacrifice. But it's definitely something you need to be aware of. Other things that business owners need to be aware of: fuel duty has been frozen until September 2026. I think that's an important one to mention, because actually the cost of getting places, whether it's getting to clients and transporting if you're service-based, or that haulage cost if you're a product-based business, the fuel freeze has been extended till September 2026. And Rachel Reeves also announced there will be some sort of rule put in place so that petrol pumps can't inflate the petrol cost when the wholesale cost drops. So they have to pass on that saving to the individual and the business owner. Speaking of vehicles, the EV road tax that was rumoured before the budget, or leaked before the budget, is coming into force from April 2028. So again, we've got time to plan this, but just so you're aware, what they're going to do is, if you have an electric vehicle, it'll be 3 pence per mile. If you have a hybrid vehicle, it'll be 1.5 pence per mile. And that will be paid annually when you pay your road tax or vehicle excise duty every year. I believe they're going to build a system where you would input your mileage and that would calculate how much you owe. Otherwise, I don't know how else they track it. But again, it's coming, and it's frustrating because for years we were pushed as business owners and individuals to buy electric vehicles, given all these grants and all this tax relief. And now they're going to take it all back again. I'm going to stay politically neutral. I'm Switzerland as best as I possibly can be. I also wanted to go into employment costs, because I think it's very important to show you and explain how that's going to look for you going forward. Because the national minimum wage rates were announced the night before the budget. They are £12.71 per hour for those aged 21 or over, £10.85 for those aged 18 to 20, and £8 an hour for those aged 16 to 17. And that all comes into force from April 2026. So what that means is, if you have an employee that's on national minimum wage, aged 21 or over, who does 37.5 hours a week, their annual take-home pay will increase by £663 per year. But that's not the end of the story. Because as we know, as employers, we have employers' national insurance, we have pension contributions and auto-enrolment that we have to think of too. So as long as it's a standard tax code, they don't have student loan deductions or anything like that, the cost per employee is £1,151 per year as an employer. So what that means is there's a higher national living wage, there's higher employer national insurance in real terms because that minimum wage has increased. There's more pressure on payroll budgets than ever. There's going to be higher recruitment and retention costs and ongoing inflation in business services, although the OBR have announced they expect that to be 0.4% lower next year. This matters because if you're hiring, this matters. If you're pricing your services, this matters. And if you're planning your cash flow, this really matters. What we do for our clients at ABCS UK is we put the old minimum wage, the new minimum wage rate, and show them what that actually looks like in real terms across their employees using real data. If that's something that you think would be helpful and useful for you, our power hours are £149 an hour, and you can book a free discovery call to see if that's a good fit and if you will get the value from that, and we can book it from there. So go on to abcsuk.com or DM us on socials, ABCS UK, across all the social platforms, and we can get that call booked in for you and help you stress less, plan, and be clear and confident with going forward with these changes taken into consideration. What you should do now, if you're a business owner: 1, review your director pay strategy, get a call booked in with your accountant, dividend tax raises next year, plan ahead, get savvy with your tax, get confident and knowing what you're doing and what them rates are going to look like, so you can start saving for tax or start planning for different tax strategies to make the most of the income in your business. Number 2, revisit pensions. That's so important. Salary sacrifice loses its advantage in 2027. So though you don't need to do it now, you need to start planning ahead. 3, tighten that cash flow. 2025 to 2028 will test even good businesses as those costs goes up. The market's not growing as quickly as it should, despite the OBR upgrading the growth from 1% to 1.5%. Last autumn in the budget, they said 2% and then downgraded it in the spring. So actually, we're still down on what they predicted last year. 4, pricing update. Costs are rising. Make sure your margins survive. Now more than ever, look at your pricing, look at the room for growth, look at the margins, think of all the increases that come naturally, things like services, cost of goods are naturally increasing. Those things need to be taken in consideration with your pricing. We need to make sure your margins survive, even if those costs suddenly start to increase with these new employment changes, because even with the income tax threshold freezing, that cost as an employee has to go somewhere. And whether you're buying services from another business, you're buying materials and goods from another business to then sell on to make your product, those costs have to be taken into consideration. 5, Use ISAs to shield your savings income. So although the property income and savings income are going up from 2027, if you use an ISA, you have a limit, which is £20,000 at the moment. I know they're changing it, so some will be investments and some will be cash, which I will cover in the next episode of the 3Bs podcast. So stay around for next week's episode if you want to know more about the personal impacts of the autumn budget for you as an individual. But actually, plan early. You can start using those allowances and make the most of them now so that you're not hit with that 2% rise as harshly in 2027. And number 6, brace for HMRC scrutiny. Compliance enforcement is ramping up more than ever. What that means is that they are using AI, they're using technology, they are hiring more members of staff to seek out those who are tax avoiding, tax evading, and those that are simply making mistakes to make sure that HMRC get the tax they're due. Again, more important than ever to have a bookkeeper or an accountant that knows what they're doing, that can help you navigate the changes, the legalities, and find those loopholes to make sure you are as efficient paying tax as humanly possible. So that's the Autumn Budget 2025, a little over 15 minutes, but this is the bits that affect you as a business owner. As I said, next week's episode, I will cover the Autumn Budget as an individual and what that means for you as a person. If today's episode helped you make sense of the chaos, do share it with another business owner, because I want them to know the truth behind the headlines and the bits that are hidden in the supplementary pages that you don't hear announced on the TV. And remember that although the numbers look gloomy and the budget maybe wasn't as bad as we first thought, your business is not built on government announcements. It's built on strategy, resilience, and raising your standards. Thank you for listening or watching on YouTube. I will see you next week for the next one. Bye.
And that brings us to the end of another episode of the 3Bs podcast. I hope you found it useful and that you're walking away with some motivation, inspiration, or education to help you build a better business. Don't forget to subscribe, leave a review, and of course connect with us on social media for more insights, tips, and behind the scenes content. Your next step in building a better business is just a click away. I can't wait to connect with you, and I'll see you on the next episode. Bye.